The broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, welcome to the AbleSys webinar. Ron here, and we'll go over the different charts and signals. We'll take a look at a swing trading chart first. This is a really good chart that I like for swing trading. It's a 120-minute daily combination because, of course, we always use two time frames combined into one chart. And what I find works really well is a 2-hour daily combination. It's for a swing, for like you to stay in the trade for like a few days or a week or even longer if the trend keeps going in place, like this particular one here. But it's helpful, especially for option trading. The only problem with it, or with any kind of swing trading, is the opening gaps. Sometimes gaps way up or gaps way down, and you wind up getting stopped out, putting your stop losses in the proper place. That's the only bad part about swing trading. But right now, the past month, the swing trading has gone real well. It seems like things different types of trading takes turns. For example, the day trading is going really smooth, and then sometimes it'll be a little choppy. Like today was a little choppy, although there was two really good trades, two big moves, and that really took care of all the smaller losses. But you had to really be on top of it quick because they were really fast moves. But sometimes the longer trend stays in place. Sometimes that gets choppy, kind of like it takes turns. So that's the way trading is. Nobody can move the market, but we can adjust to it, or we can just take what they'll give us for that period of time. I know everybody wants to make it like it's a job where you get X amount of money every week, the same amount every week. But that's definitely not the trading business, and that's why it's not for everybody, because it's very erratic as far as up and down. It's not like a steady paycheck. Sometimes that's the hard part, but you just have to have the patience to wait for the trades and the discipline to take the trades. So jumping in over here, you've got a Goldman Sachs chart. Of course, we're always waiting for 3 indicators to agree. All 3 things have to come in place before we take a trade. So just scrolling back a little bit over here, and it's the same colors and dots, same rules, no matter what you trade. We need to have a big red dot. Some people have X's on their chart. That's perfectly fine. It's the exact same thing. You can use a dot, a big dot, or a big X. There's no difference. It's just personal preference. So you're looking for a big red dot, of course, a red bar, and then a small red dot, which is right in there. It's a little hard to see, but it's there. That's what you want. You want the triple confirmation, and down and away it went. Boy, this one this thing just dropped a lot of money. There's a lot of money on this chart. Now, exit rules: either prices go above the red dots and they go to the previous higher red dot. Ooh, we don't like that. Or you can use the 3 green bars exit. That's okay too. If you want to use a 3 green bar, you're going to be in and out real quick. It's just, it's not for everybody. You could either use it for day trading or swing trading. But sometimes it's helpful, especially for the intraday trading, where you're not giving back, not a lot of give back that way with 3 green bar exit, because that's kind of telling you, that it's the trend is weakening. However, you can get right back in again, like right here. You've got everything you're looking for, red bar, and it has to be exactly this or no trade. You have to have a big red dot or X. You have to have a small red dot, and you have to have a red bar. There's nothing else will do to go short. The same way we can go long, big blue bar, big blue dot, small blue dot. You have to have all 3 indicators agree. Because what that means is you got 2 different time frames, big dot, small dot. You got 2 different time frames agreeing it's going to go higher. Of course, blue means higher, red means down. And you've got the red price bar, to go short, and the blue price bar to go long. So the point is you have to have all 3 indicators, because it means 3 indicators and 2 time frames all agree to go long. And of course, this was a tremendous trade right over here, because technically we started up here in the 180s on Goldman Sachs, and then we finally wouldn't go long, or would consider going long, in the 160s. So that's a very big winning trade. You're in and out a couple times, but that's a really nice trade. You got another sweet spot right there: red bar, red small dot, red big dot. You even have the red arrow, which is a fourth indicator green. How did it do? The AbleTrend signal. 3 days later, it dropped 20 points. You got yourself a put option on that one. 20 points 4 days later. That's a lot of money too. We were stopped out right here. Margins went above the red dots, and there's the previous or second higher small red dot. Pretty cool stuff. Just a question of having the discipline to make the trades. Now, this we're not going to get in on. You say, why not? Blue bar, blue dot, big dot. You just said look at the distance between the close of that bar, because we always get in on the close of that first blue bar with the big blue dot and the small blue dot. That's the key. That's another thing. Very important. You want to get in on the first combination of all three indicators. The first combination. Usually it's the big blue dot in the middle of the blue bar, because that's telling us it's the first, it's the trend change. It's the first new blue bar. It's the trend change. This, big blue dot in the middle. But in this case, no, we don't have the big blue dot below, so no trade. So we're going to get in on this one, but I mean, that's 14 points above the blue dot. There's just no way you can take that trade. There's too much risk. I mean, the risk would be putting your stop loss on the bottom of the blue bar. So if you did take that one, technically speaking, that's where you're going to put your stop loss. And then here's 3 green in a row. We're going to exit. You know what? That's only a 2-point loss. So as long as you've got your stop losses in place, I mean, technically you can still take that trade. I'm just not a big fan when it's just ridiculously far above the blue dots, or ridiculously low. I mean, that's the furthest the price is away from the dots, whether it even be, even the red dots or the blue dots. It's just, that's kind of crazy. There's your textbook sweet spots. Blue bar, blue small dot, blue big dot. Any one of those blue bars, got to jump all over that, because that's a really low risk trade. And that's what we're looking for, low risk trades only. That's just perfect. I mean, you just can't get any lower risk than that. That's a terrific risk reward ratio. And that was 3 days ago at 180, and you're at 199 and change today. I mean, that's 19 points profit in 3 days. God, a call option on that one would be a mega home run very quickly too. You can use it on any stocks. This is basically for stocks, but it's just not for futures. The 2-hour daily combination is great for swing trading on stocks or indices. You can use any of the ETFs or indices. That's perfectly fine too. But this is a really good swing trading chart. It's very helpful. Works really well, as you can see. Now, you can't control the price action, but even on the losing trades, we got stop losses in place. Nobody's ever going to get beat up following the AbleTrend rules. That's real important. Never to get beat up on a trade. Deb says, thank you for the webinars. You're welcome, Deb. What AbleTrend indicator using for the big dots? AbleTrend 3, Skip. AbleTrend 3 on the daily chart. Always went on all intraday charts. You always use AbleTrend TS. On any daily, weekly, monthly chart for the higher time frame, you always use AbleTrend 3. It's a little faster indicator. You're welcome. Okay, let's take a look at the E-mini S&P. Same rules, same colors and dots. Everything's exactly the same. It's just a different time frame. It's just a 1-minute, 3-minute combo versus the 2-hour daily combo for swing trading stocks or indices. Now, if you're going to swing trade futures, you want to use something like a 30-minute, 90-minute. That's a good one, 30, 90. 1 hour, 3 hour. It's always times 3. Let me put I always put a 30-minute chart on the side of my charts. You don't have to, but I'm going to put that in over here. I just always look, it doesn't mean you have to trade in the direction of the 30-minute. Does not mean that. It just means I just like to see the bigger picture. Okay, I just put it off to the side. And we're going to make this 30 minutes. I just think that 30-minute chart is just a great chart. Look at that chart right there. I mean, look how accurate that is. That is super. Look at that. A couple days ago, look, it hits the blue dot, bounces off of it, bounces off of it. And that is cool. Red bar, red dot, down it went. Hit the red dots, bounced off of it, bounced off of it. Now blue bar, this came in about the open this morning. Actually, a little before the open. Up and away it went all day. I just love looking at the dots because they tell us where there's going to be an invisible roadblock in the market. So that's the way I set it up. Again, just personal preference. But I like to look at the 30-minute. And the ES has been a little calmer than the NQ. So I've been sticking with the ES versus the NQ. But again, just personal preference. But it just gives me the big picture. Now, a lot of people say, oh, we'll only trade in the direction of the 30-minute. No, because remember, the 30-minute is 30 times slower than a 1-minute chart. So when the market reverses, let's say it's going up all day and all of a sudden it reverses and goes down, a 30-minute chart's going to take a couple of hours before it catches up. So you'd miss out on a big move. You'd never catch a reversal. So that's why even though the 30-minute is in an uptrend, you still take the short trades when everything agrees. Red bar, red small dot, and red big dot on the 1-minute, 3-minute chart. However, it just tells you which way are going to be the more powerful trades. Where am I probably going to get the biggest profit? What trade is going to last longer? Is a buy signal going to last longer, or is a sell signal? Is a buy signal going to be the one with that little extra pop to it? Probably the more profitable trades. Well, definitely you're going to go. Whatever the 30-minute says is what you're going to get the biggest bang for your buck. But that doesn't mean you don't take the 1-minute, 3-minute sell signal, because look, if you had a sell signal here, you still got 13 points before you get to that blue dot, before you get to a roadblock. So if you get a sell signal on a 1-minute, 3-minute, yeah, absolutely take it, even though the 30-minute might be long. It just means that if you have a 30-minute and a 1-minute, 3-minute, everything in the same direction, probably going to be your more profitable trades and your longer lasting trends. Makes sense. Going to be the longer lasting trends, when the 30 is also in the same direction. However, let's jump in real quick here. We've got a nice little trade right at the open, and that was the two big winners today. You had to catch that one, and don't worry about the bands. If it's the first blue bar with the blue dot, it also has the big blue dot in the middle. It's a trend change blue bar where you have the big dot in the middle, and of course you have the big dot, the little dot. You even have the arrow. You just got everything screaming at you here that this is going to go higher a couple of minutes after the open, and that day just took off from there. There's your third green bar exit, but that's 10 points higher. So that was a nice trade right there. And even if it was 8 points, maybe you didn't grab the whole trend, that's fine. 8 points is still $400 per contract in the first 30 minutes of trading. Got these blue dots below, stay in the trade, you're safe. Especially if you have blue bars and blue dots, oh boy, then you don't want to do that. So that worked out really nice. And then, of course, no trade zone. And this is a losing trade right here. Stop loss goes on the bottom of the blue bar. Those first blue bars, the first red bars, when everything agrees. Now, again, you have to have all three indicators. The best combination is the first blue bar, small blue dot underneath, and big dot. When you have all three, that's your best trade. But that's a losing trade right there. So, we gave back 2 points there, a no trade zone, and we're going to give back another valid trade right there. Stop loss goes on the bottom of the blue bar, so kind of got stopped out on the very next bar. It's about a point. I'll even stretch it to 2. So we're going to give back 4 points there. After 10 points plus 10, we're going to give 4 back. You got really nice sweet spots in there. Okay, we're going to pick up 2 more 2 points plus there because you got some nice sweet spots right there. Everything is just perfectly lined up. Blue bar, blue small dot, blue big dot. Throw in the big arrow also, just as an extra indicator. And there's your third green bar exit. And then you can get right back in again right there. 3 green bars is a break even. So then it kind of got a little sideways break even. Obvious no trade zone here. Now, you're right here. You're getting in that dead zone that we call the dead zone between 12:30 and 2 o'clock Eastern. We've gone back thousands of trades, and we found between 12:30 and 2 o'clock, be a good time to skip. Doesn't mean there won't be a good trade there because there were plenty of days there were good trades. But overall, just generally speaking, going back thousands of trades, it was very choppy during that period. So we call that a dead zone. Be a great place not to trade and take a break. So And today was a perfect example of that, because you can see between 12:30 and 2 o'clock Eastern, which is right in here, it was just a choppy, ugly mess, as it usually is most days. Not every day, but most days. So we'll play the percentages and stay away at that time. Of course, you had the big move right here, and that was a tough one to get in, and it was at the bands, but it was the first blue bar with the big blue dot in the middle. It was, quadruple confirmation, so you got to take it. I mean, prior to that, by the way, there was a losing trade here. It was only a point or so, but actually 2 in a row. This is about a break even, and this is really about a break even right there too. Let's even call it a point loss, because I like to exaggerate the losses to make it really, really realistic. But this was a tough one to pick up. Believe me, I could totally understand if anybody didn't get in on that one. And there's your third green bar exit right there. But that was it turned out to be a really good move. There was some quick it was a quick move because there was some news on the tariffs, easing of the tariffs or something. So the market exploded when it heard something like that. Then it backed off. But that was a nice little move there. Anybody was quick on the trigger and picked that up. Certainly understandable if you did, because it was a very fast move. There's your perfect triple confirmation sell signal with a red bar, big red dot, and small red dot. Now, and again, even though the 30-minute is clearly still in an uptrend, you definitely take the short trades. And that was going to be going to lose 2 points on that one, but that's a perfectly valid trade. And then we get back in again here. There are some sweet spots right there. They're not really sweet spots because the prices aren't up at the red dot, but those are valid trades. And we're going to get out over there at about break even, so I'll just call it a minus 1 point. And then that's pretty much the end of the day right here. That's pretty much it just went sideways into the 4 o'clock Eastern time close. So, it's again, same rules, same colors and dots, but it's just, every chart's a little different. So that's why I like to go over it and, talk about some of the small little nuances that sometimes appear. But otherwise, good stuff. And, just keep at it. Just wanted to also show that 2-hour daily swing chart too. So same colors and dots, same rules. Sometimes, you get those 2 or 3 losses in a row and it's hard to stay in it, especially on a choppy day. But, keep in mind that 12:30 to 2 o'clock, which is 9:30 to 11 o'clock Pacific, that's generally a dead zone. So, going over a couple of years of data, we haven't found any profit during that period. In fact, it was about a break even if you just traded that 1 hour, 1.5 hours. The best profit by far, 65% of your profit came in the first 3 hours, and then the last 2 hours was the remaining 35% of your profit. So first 3 hours and last 2 hours, the best times of the day to trade. Thanks for being here, everyone. I hope I was helpful, and stay in touch. Anything I can do for you, call or email anytime.